tax reform bill has entered a critical debate or at that stage, which probably lead to a compromise among the lawmakers. It's likely to be the catalyst to test their confidence, thus forcing the indices to retreat. So in this picture, do you think market correction could be in play very soon?
I do think that is possible. I think there have been a number of factors that have been in place for the last couple months that are of concern, the way I look at markets. And it really has nothing to do with tax reform, but a lot of it's about the technical structure of the market. So there have been fewer stocks hitting new high territory. That's a concern. You've seen that in the breadth indicators. So, for example, while Apple and Facebook and Amazon continue to go higher, the majority of the stocks have not. And so fewer and fewer stocks hitting new highs. Sentiment has also been very, very optimistic. And so it went from a period in August where there was concern about the DC drama or the marches or the natural disasters, be it earthquakes, hurricanes, and all that has been tossed by the wayside in favor of tax reform and the rally into year end, because seasonally we're in a bullish time. But investors have gotten a little bit too optimistic, and if anything, the recent pullback in high yield, from my perspective, is important and a negative. And so financials are starting to roll over a bit. All those things could contribute to at least a 3 to 5% correction, in my opinion, into early December before we see any rally.
What could be the most possible version by the year end of the market moves Marcus Small mentioned, based on matter of fact of the earnings seasons?
Sure. So technical targets for me are right near 2,500 for the S&P, which is not too far below where we are now. It would be a minor pullback, and then a rally into year end, and then potentially a larger correction sometime next year. I do think tax reform is important. I don't think it will pass in its current form, and I think really reform will be delayed for the next couple of years. If anything, we could attempt a tax cut, but there's a lot that's been placed on this bill as being very, very important. So any signs of failure could certainly set investors up for selling, just because people have looked upon it as being so important.
Yeah, they were losing their faith on the tax reform. Going forward, maybe next year, they will be slow in the process. They will be hit the market hard.
Next year is difficult only because the midterm elections are coming up, and there's very little time to pass anything. So earnings season has come and passed, and if you look at the major accomplishments of the Trump administration, there haven't been any monumental large achievements. There have been a lot of small bills that have been passed in record numbers, and that's obviously a positive. But everybody's looking towards either tax reform or some indication that we can repeal Obamacare and healthcare, and that really has not happened in any form. And so if the Trump rally happened because of these factors, thinking they would happen, the failure of those to happen is certainly a negative. The one positive I'd point out, though, is that businesses in general have a more optimistic view going forward because of the lesser regulation, and that's definitely a positive.
And next, to look at the commodity market, crude oil prices fell like 2% yesterday, and the prices were being pressured by a global commodity sell-off. Do you think this time mostly by the profit taking after 5 straight weeks gains, or something else that we have saw on the crude oil here?
I think the inventory levels were quite high. We saw recent builds in inventories based on the API data and the data actually for the DOE that we saw recently, and so that's a concern. WTI crude had gotten up to former levels right near $58. So that's an important technical level up near where it hit back in January of this year. So we reversed. It's tough to make too much of the pullback. I think if you pull back a few dollars to 55, there should be support, and really any minor pullback would still be viable. I'm worried if we see a larger break. We are heading into seasonally a very bearish time for crude oil. So historically, you start to see builds around this time of year, and the demand for heating oil and gasoline for heat obviously increases, and that could cause a traction and a pullback in energy in general.
Yeah, and we are holding like above 55 right now. Are you looking for 60 for WTI as target, or Brent for 70 by the year end?
I don't think we'll get to 70 by year end. I think 58 is a big, big level. And if we get above that, then we're likely going to move into the low 60s.
58 for WTI?
For WTI. Brent crude has actually already surpassed its prior peak and actually is in better shape technically. So the U.S. crude market has had understandable pressure getting the rigs back online, I think, and just the hurricanes did cause some real issues, I think, with production, and so that's gradually being put back online. But Brent crude is much stronger technically than WTI right now.
Yeah. And next for the good market, good prices edged up a little bit yesterday from week low after the dollar dips. So we like to know that because the good prices has been in a very narrow range for a while. So what can you will consider as the most important factors that will lead and to hit this market to move?
So to answer your question, the two things that I look at that I think are the most important for gold are really the U.S. dollar and the price of treasury yields and treasuries. If you start to see yields and the dollar both move up, those tend to be very bearish for precious metals, and we almost always see a big decline. If they tend to be split, where the dollar's rallying but yet yields are falling, gold can be mixed and choppy, and that's precisely what we've seen in recent months. So my thinking is we're still in sort of a wait-and-see mode. There is no definitive trend. The trend has been down since 2011. It's not really broken out yet, to my knowledge, based on the charts I look at. So it's still tough to be real bullish on gold. I think we're going to need to see a more meaningful decline in the U.S. dollar and really see rates stay where they are. And any uptick in rates is going to be a big negative, I think, for gold. So a lot of it depends on growth. And if growth starts to become more apparent, then I think that's going to be a negative for gold.
You might notice that there's a couple of Chinese companies listed in recent weeks, both on Nasdaq and NYSE,
right.
And the Wall Street Journal's other financial institutions in Wall Street has commented this phenomenon that a flood of Chinese companies, yes, just a surge. The biggest driving the biggest of the worldwide surge of the IPOs in a decade. So, what's your perspective on this popular trend?
It's amazing. I'm very encouraged by it. I'm very optimistic going forward in the long run. Oftentimes, though, from a contrarian perspective, when you see IPOs spike like this, sometimes it can mark a peak in activity. But for the near term, it's certainly a good sign. I don't think you can differentiate between American IPOs and Chinese IPO. I really am optimistic. I like seeing new stocks, brought to market and become public, and I think in general it's good for the marketplace. So I think it's a great sign.
Some analysis would like to say it's a bubble for sure. So what do you think? Riding on the bubble is one of the best way to make profit.
Bubbles are always difficult to predict until they've popped. I think, if anything, from my perspective, seeing the runaway success of Bitcoin when investors have little to no knowledge of how it works outside of they're buying it because they expect to sell it at higher prices, and the fact that we could have futures potentially on the FANG stocks, we're starting to see indications of excess when you look at those things that make me a little concerned. The IPO market, I wouldn't say yet is at levels that are indicative of real froth and a bubble.
So what do you think about Bitcoin phenomenon?
I think the introduction of futures could make it a little bit more legitimate. So that's actually a positive for Bitcoin. I think that right now we're at a stage where it's fashionable to knock Bitcoin and saying that it's a fraud. Until these people truly embrace it, then there's just a lot of naysayers and it can continue to go up, really for reasons that people don't understand why. And a lot of that's just a trading phenomenon. There's more buyers and sellers and people like to buy dips. Until everybody fully embraces the concept of Bitcoin, I still think it can go much higher. And
Are you trading on Bitcoin?
I do not own any Bitcoin. I'm not a miner of Bitcoin. I wish I would have been on that. And
Same here.
It might be something I would consider if it falls, but I have no vested interest. I prefer stocks and commodities and ETFs, so that's my forte.
It's a solid ground for us, yeah.
I don't like seeing 15% moves overnight. That makes me a little nervous.